For borrowers and mortgage holders, a little light relief today as the Bank of England brings interest rates back to an 18-month low. But it came with a customary dose of caution, bumps on the road ahead, with consumer and business confidence shaky.
I like the leading
movement. It's so good, isn't it?
Great.
This ergonomic furniture seller in Bristol has seen a drop in footfall.
We are still seeing a decline in the number of people coming through the doors, and people aren't spending money on non-essential shopping anymore.
It's been adjusting to a cocktail of external price rises too.
Shipping costs, again, have been massive increases. Last year we had the business rates increase, didn't we, back in April? And that was a real hit on a business of our size as well. Factory production costs, supply of materials, be it wood, be it foam, whatever's involved in the production of our goods, there have been increases year on year, all the way through COVID. And I think there's still a fallout from that as well, to be fair.
The government has made growing the economy one of its key pledges. But today, in a blow to earlier and more optimistic predictions, the Bank of England slashed its growth forecast in half from 1.5 to 0.75%. And while interest rates came down to 4.5%, with analysts predicting further cuts this year, the bank warned too that we live in an uncertain world. The Bank of England has decided to cut interest rates, but it did warn of bumps in the road ahead. Inflation is set to rise again over the summer, and it says that means it'll have to be careful in judging when it can bring rates down again. And while the threat of Trump's tariffs looms large on the global economy, higher water and energy bills in the UK are set to drive inflation back up to 3.7%. That's above the 2% target, one we're not likely to meet, the Bank of England says, until 2027. In Bristol, the cost of living crisis is not the distant memory people hope it could be.
Compared to 22, 23, it feels slightly better, but compared to last year, I like a relatively stable / slightly worse baseline, I would say.
A lot of people struggling to pay mortgages, rents and that sort of thing, even in Bristol. I think Bristol's quite up there with one of the highest rates of rents in England.
Some things are better, but you know, I'm working extra hours outside of my day job to try and get a little bit of extra income as well. The fact that I can work from home helps because I'm not paying for transport as much. But yeah, I think hopefully things can only get better.
The one glimmer of hope on the horizon, growth predictions for 2026 and 7 were today upgraded, with one caveat: who knows what's around the corner.
Well, our economics reporter Neil MacDonald is here. So Neil, is what the Bank of England announced good news or bad news?
Well, the immediate bad news is that inflation is heading back up, as you were hearing in Amelia's report. We all lived through inflation surging to a 40-year high. But then it did drop back to 1.7% last autumn. Since then, it's been drifting back up slowly to stand at 2.4%. Sorry, that should be 2.5%, apologies. Today, the bank said that figure is going up again to about 3.7% by the end of the summer. Now, that is not only way above the official target of 2%, it's getting pretty close to the rate at which earnings are expected to grow. And of course, when inflation exceeds pay growth, then at that point, people's real standard of living is going to start to fall.
So why is the bank cutting interest rates if inflation is higher? How does that make sense?
Well, normally we'd be sitting here thinking higher inflation equals higher interest rates. I mean, the bank believes that what's going on here is primarily caused by energy prices, and it's to do with a colder than expected winter in Europe, driving up prices there, and that affects us as well. The bank sees that as short term. It believes it can look through it and not react with higher interest rates. Of course, it does mean that people's energy bills will be going up, and energy bills are something that is very sensitive, very visible for a lot of people.
So what's gone wrong with economic growth?
Well, I mean, it stopped. I mean, we're going through a stagnant patch, which looks like it's going to last for 15 months. Let me show you some of the recent quarterly figures. So in Q3 of last year, which would have been the first full period under the Labour government, economy flat. Bank thinks we shrank a little bit in Q4, then grew by 0.1% in current Q1. Now, those figures would suggest that we have avoided a recession, but we've avoided it by sort of 0.2 of a percentage point. Why the stagnation? A lot of businesses blame the government for putting up national insurance, for being too negative about the economy. It is interesting today, the bank was saying that this stagnation appears to have begun several months before the general election was called.
So, Neil, my perennial question, how bad is it?
Well, it's alarming, isn't it, that we're sitting here, you still need to ask that question after all these months, if not years. Look, I mean, interest rates have come down. The inflation boost, the bank thinks, is temporary. So that is all good news. But I think those lower growth figures could be a problem for the government. Next month, the official forecast of the OBR gives its take on where the economy is going. If it puts those sorts of numbers into their forecast, the public finances are going to look a lot weaker than they are. And all of this makes no allowance for President Trump putting up tariffs. The Bank of England's point is, why try to forecast what we don't know? If those tariffs are coming, these calculations are going to need a major rewrite.
Neil, thanks very much. And tariffs is something I put to the Bank of England governor. I sat down with him earlier this afternoon and started by asking whether close to zero growth and rising prices were the very definition of stagflation.
We have seen weak activity really since last spring. The economy, in growth terms, has been quite flat since last spring. On the inflation side, the story's a bit different. So we have seen, I think, a continuing path of disinflation coming out of the very big shocks we had a few years ago. I think we've seen that continue. It's gradual, but it is there. And that's why that's the biggest reason why we've cut interest rates today. I do unfortunately think we're going to see some pickup in inflation this year. Nothing like what we saw in the recent past, don't get me wrong. This term stagflation, which I don't use, I think the two parts to the story need to be seen both separately and together, and they're not quite as it would suggest.
But looking at everything you've set out this morning,
yeah,
close to zero growth, higher prices, you describe it as a bump in the road,
yeah,
but it's more like a sort of giant pothole, isn't it?
Well, I don't know. So we do expect to see a pickup in inflation. That we think is the major cause of that is energy prices, but there's some administered prices as well, things like water bills and so on. But I don't think that tells us anything about what you might call the fundamental balance of the economy, and that's what determines inflation over time.
Right. But I mean, nevertheless, you've halved the growth forecast this year, and the government's number one mission is growth. I mean, that's looking a bit like Mission Impossible at the moment, isn't it?
I think you have to see that in context. I'm a very big supporter of the government and its growth mission. Now, we have had weak growth in this economy, in this country, for really since the financial crisis. So we're talking now 15, 16 years. Actions to address growth are very good and very important, but they won't, turn into results next quarter. That's not going to happen. This is long-term, important work.
But essentially, you're once again saying jam tomorrow. I mean, people are fed up with this, as you point out. It's 15 years. Yeah. And I just wonder whether, the Chancellor's got a lot of blame for the current economic woes, fairly or unfairly. But are you also to blame? Because today you're saying, well, we're going to be gradual and careful in our interest rate cuts. Are you once again too slow to boost the economy in the way that some say is needed?
Well, the best thing that we can do for growth is to have sustained low inflation. That's absolutely the best thing the Bank of England can do, and that's what we will do.
That's still your number one mission. But that conflicts with the growth mission, potentially.
Well, no, they don't, actually, because, again, I say the best thing that we can do to support growth in the economy is to have stable low inflation. But I am a very big supporter. And I can understand the jam tomorrow comment, but I don't think we should criticise people, and I'm not making a political point to this point, who say we are going to tackle the growth issue, because it has to be tackled.
Is there a kind of get-out-of-jail-free card for Keir Starmer here in the shape of continued high immigration, given that that's probably going to show up sooner, or it's here with us already, rather than something like the advent of AI?
What I would say is this: when you look at the weak growth performance of this economy over the last 15 years, there are two things that make up the underlying growth of the economy: the supply of labour and productivity. Productivity has a lot to do with investment. Now, the weak growth story has really been about productivity. Supply of labour hasn't really been particularly weak in the last 15 years. So, I do think that addressing the growth challenge has to address the productivity and investment story. Now, will AI ride to the rescue? I think where it will end up is people working with AI. I don't buy into this job destruction story at all. I think it's how we, in a sense, harness it to enable people to be more productive.
You say you can't form a judgment on the impact of Trump's tariffs if and when they arrive in the UK. But if tariffs do happen, whether it's UK or the EU,
yes,
all your forecasts today go out the window, don't they?
Well, it will have an effect, and that's why we've highlighted that there is much more uncertainty now in the world around us. The other thing I would say is this: anything that what I would call fragments the world economy will be bad for growth in the world economy. And it has to be very clear: the UK is a very open economy. Historically, it's a very open economy. That's one of our great strengths, really. In terms
so we might be worse hit than others.
So we will be affected by that,
whether or not the tariffs are applied to the UK or.
Yes, yes, we are affected by developments in other parts of the world. So we have to be very, very focused on where this will go and have our voice in that process.
Well, and if the government asked you for advice on whether the UK should retaliate if tariffs are imposed here, would you advise them to do that or not?
Well, I'm not going to make that judgment because, frankly, it would hugely depend on understanding the context. I'm a very strong supporter of free trade by disposition. It's a very important part of our history in the UK, actually, and it's served the UK well over more than a century, actually. But you'd have to judge that. Anything like that, I would reserve judgment to understand the context.
Governor, thank you very much.
Thank you. Really good to see you.
Now, Prime Minister Sir Keir Starmer got the news about the interest rate cut whilst in Preston this morning, selling his desire to reform planning rules for building mini nuclear reactors in England and Wales, trying to increase growth and decrease your energy bill. Our senior political correspondent, Paul McNamara, was there. Paul, what occurred?
Yeah, it's rather an awkward sell to be giving a speech about how your latest policy will promote economic growth when at almost precisely the same time, 250 miles away, the Bank of England is saying growth will be halved, because at that moment people don't really want to hear about small nuclear reactors that may be built all over the country in years to come. They want to know what you're going to do right now to promote growth. And the problem that the Prime Minister's got is that with predictions of growth being lowered and inflation being higher, and many analysts now saying that his fiscal headroom has all but disappeared, is that it limits his options. So I began by asking the Prime Minister if his problems with growth raise the stakes now in the special relationship with Donald Trump, where he can ill afford to anger or even offend the US president, with the risk of trade wars and tariffs looming.
Well, I think it's important to look at what's happened. The interest rate has come down. That's the third drop in interest rates since July. That's good news because for many people watching this, it means they'll have more money in their pockets. Wages are going up higher than inflation, so again people feel better off, and the minimum wage has gone up. But we're not going to turn this around if we don't also do the big things, because I'm absolutely determined we're going to grow the economy, and I don't mean a line on a graph. I mean people feeling better off, that they feel secure, they've got more money in their pocket, and they can say, my life is actually now better and I can do some of the things now that I couldn't do before.
A lot of words, but I can't help but feel you ignored the bit about President Trump there. What are your red lines? Yes or no? Was President Trump wrong yesterday to say that the US should, quote, take over Gaza?
Well, look, I mean, on the economy, I've obviously discussed with President Trump how we work together on trade and the economy. We've got a huge trading relationship with the US, and I want to improve on that. Obviously, at the same time, we're resetting our relationship with the EU, and I think both of those are very, very important. We're continuing to have discussions with President Trump about that, because I'm determined to take the steps that are necessary to drive our country forward. But we also need to change our posture, frankly. Nuclear is simply an example of where we've been in a defensive posture for too long, thinking that we can't do things in the United Kingdom. We can, we should, and we will. And the question I put to everyone is, why not Britain?
Was that a yes or a no?
In relation to
President Trump on Gaza, was he wrong to say was the US take over?
I mean, I made my position, I think, pretty clear at Prime Minister's questions yesterday, with the need for the ceasefire, obviously, to be seen through all of its phases. I think that's vitally important. But also, not only do the hostages absolutely need to come out, but we need to work with Palestinians to rebuild their homes and their communities in Gaza. And one of the abiding images for me was not just Emily Damari, the hostage who came out, but also the thousands of Palestinians who are walking through literally rubble to try and find their homes and their communities. Have to work really hard to allow them to rebuild those homes.
Prime Minister, thank you very much.
Thank you.